And another big shift in the housing market. This one, better news for renters. Not so much for investors, though. Diana Olick has the details. Diana?
Well, Kelly, apartment rent growth is suddenly slowing at a time when it usually ramps up. Rents in May grew by just 0.4% from April. That's less than in May of last year and the year before. So now rents are 0.5% lower than May of last year. This after they had been moving closer to positive territory over the last 6 months. All of this according to Apartment List. Now, in actual money, the national median monthly rent is now $1,398. That's up $5 a month compared to last month, but down $6 compared with May 2024. Why? Well, because vacancies are on the rise again, hitting 7% in May. That's the highest since Apartment List began tracking this in 2017. And that's all because of just a ton of new supply over the last few years. Last year, in fact, saw the most new apartment completions since the mid-1980s. Multifamily construction peaked last year. It's now on the slide a bit, but there is still a lot of new supply this year as well. That's the national picture. But of course, all real estate is local, and some markets are seeing much steeper rent declines, namely Austin, Denver, and Phoenix. These are markets that overheated during that pandemic migration and are now cooling fast, both in rents and in home sales. So good news for renters, not necessarily for the REITs in that space, like Avalon Bay, Camden Property Trust, and Equity Residential. Rents, though, are expected to strengthen later in this year as new supply peters out. We do know, however, renters are staying in their apartments longer now, so that'll help support some of these occupancies. Kelly?
Interesting tug of war there. Diana, thank you very much. Diana Olick.